Hello and welcome to The Upside. I'm your host, Nicole Correale. It's been a record year for Canadian ETFs. Canadian ETF inflows have already outpaced last year's record, hitting $85 billion by the end of September. To put that figure into perspective, Canadians invested a net $76 billion into the ETF market in all of 2024. And in just over 4 years, the Fidelity All-in-One ETF suite is the fastest growing ETF balance solution in the Canadian industry. So what's driving the hunger for ETFs, and what excites our next guest most about where the industry is headed? To help me answer those questions and more, I'm pleased to be joined by Fidelity ETF strategists, Adam Dickson and Mark Verrilli. Welcome.
Thank you. Thanks for having us.
Great to have you here. Let's start off with, the market environment today. Can you give us a snapshot of where we are in the markets right now?
Sure. I think that there's been a couple of pretty major themes that have driven a lot of equity markets this year. They've been mainly the tariffs and political tension and AI. So if we break it down between Canada, the US, and international, within the Canadian market, I think there was a bit of pessimism coming into the year, but we've ended up having a pretty strong year in equities, mostly because gold has rallied so much. And the material sector in Canada is really attached to gold. So that's really helped boost returns here despite some slowing growth. Now, if we look at things overseas, internationally, it's a bit of a different story. There was a lot of pessimism coming into the year about geopolitical tension in Europe, a lot of unknowns with trade. But in Q1, we saw really strong performance in Europe despite some of these factors, probably because of a reversal of some of that pessimism. We've also seen fundamentals improve a lot in Europe, particularly with financial companies and banks. And we've also seen a lot of investors start to think more globally with their portfolios because of all the unknowns with tariffs. So for Canada and international markets, it's been an outstanding year so far.
Right.
Yeah, I totally agree.
Well, like you said, I think the markets have kind of done, or at least investor sentiment has done a 180, because at the beginning of the year, we thought with tariffs and the geopolitical issues that were happening, it is a surprise to see that actually inflows have been fantastic in the Canadian equity space and on the international side. And gold, as you mentioned, which also broke records, reaching 4,300 an ounce just recently. So why do ETF flows matter in this current environment? And what macro trends are influencing investor positioning?
Yeah, I think in terms of flows, it gives you a sense on where the consumer or the retail consumer or advisor is looking to place capital in a time of uncertainty or global tension, like Mark has talked about, when it comes to the global shakeup with tariffs. So in terms of flows, it's been great to see Canada remain strong in terms of the growth in the ETF space as well too. But also nice to see the international side pick up in terms of kind of being left behind over the last 10 to 15 years when it comes to investment. So it's nice to see kind of a more global approach versus a more kind of US-centric, US exceptionalism being the dominant force over the last 10 years. So it's nice to see the rest of the world starting to come to fruition in terms of participation.
And I want to highlight too, another milestone is recently the Fidelity All-in-One suite surpassed $10 billion in assets. So that's fantastic. Can you explain how the All-in-One ETFs fit into an investor portfolio today?
Sure. The all-in-one ETF portfolios, they range from all fixed income to all equity. We have 6 different portfolios siloed by risk tolerance. So they're really meant to be a globally diversified, lower cost, one ticket solution that you can use as a core portion of your portfolio. We see them used in a lot of different ways across the industry, but that core piece really seems to be a common theme throughout portfolios where you can use them as a standalone, you can build around them, and depending on your time horizon, you can match the appropriate risk tolerance for you. So great investment vehicles to get started into investing, but also to use as a core piece for a larger portfolio as well.
And there's been a lot of innovation this year, and Fidelity has launched several new funds, which is fantastic in the ETF space. AI continues to be a big theme. How is that influencing ETF strategies?
Yeah, in terms of AI, we've definitely seen a correlation when it comes to our approach of investing, which is factor-based. when it comes to a lot of our ETF lineup. And when you look at certain factors, the more correlated they are to AI, typically their performance has done much better year to date than others that have a lesser exposure. So it has definitely played a major factor. However, what we like to do is kind of be a much more diversified, so that if that trend does reverse, we're not going to be stuck with the entire bill at the end of the dinner.
And I guess, is it also fair to say that it could be it's more regional in a sense that a lot of the AI is happening in the States. Momentum as a factor, I guess, would be stronger than regionally there than across the pond,
it's a great point, and I talked a bit about Canadian international markets, but when we talk about AI, we really think about the US market as the driving force behind that factor. And when we think about momentum investing, which is stocks that have performed well recently, hoping to continue to perform well, that's certainly been attached to AI in the US. But momentum's been strong in other markets. It just takes a bit of a different theme. So in international markets, for example, momentum is probably thought about more correlated with value right now. Think about the things that they've done in Europe this year. Germany has introduced some huge spending bills. They're spending a lot more on defense and infrastructure. We're seeing some more classic sectors or value sectors perform really well. So that gets tied in with momentum overseas. But certainly it's fair to say in the US, everything attached to AI is what's been performing well and working.
And in Canada too, like Mark touched on it previously, gold has obviously been a heavy driver in terms of materials here in Canada. So it has been, like for our Canadian momentum product, has been a really strong driver performance there as well too, in the momentum space.
So I guess, what do you think that says about how investors are feeling about the economy based on where they're putting their money?
I think it says that investors feel pretty good. And we've seen flows change throughout the year. Around April, when Liberation Day was approaching and when it hit, we saw a lot more money going into short-term fixed income products and cash-like products, which is usually a sign that sentiment is fairly negative in the market. But we've seen a lot of that start to get rolled in back into US equities in particular after that date, which tells you that a lot of people are probably pretty bullish on what's happening globally. And at the same time, we've seen valuations increase across a wide variety of markets, both internationally and in North America, which again is probably a sign that people are pretty positive with their sentiment on markets.
What areas of ETF growth are you most excited about, looking forward to in the new year?
Yeah, what I'm hoping to see as a continuation into the new year is that international portion of people's portfolios coming back into play. Again, over the past 10 to 15 years, international has kind of fallen by the wayside. And maybe it's been about 5% of a client's portfolio when it really should be around kind of like 10 to 20. And so getting that portion of people's portfolios back on track, I think, or what I'd like to see as a continuation moving forward in clients' books, just for a well-diversified, rounded portfolios into the new year.
And being ETF strategists, what do you focus on in your day-to-day? What are you looking at? What economic indicators, who are you speaking with to really see how you will frame everything out?
Yeah, first and foremost, we're an internal resource for Fidelity, in particular our sales teams. So we're meeting with advisors across the country, myself mostly in Ontario and Manitoba, Adam more in Western Canada. But we get to see unique perspectives from a wide range of advisors to hear what problems they're facing, what are their clients most concerned about. And then it's our job to take in some of that information and try to figure out which ETFs at Fidelity might help them solve some of those problems. That's one aspect of the job. We also get to meet with some of the dealers directly to talk about what are they thinking from a high level that they want their advisors to be buying into over the next few years. And we can try and influence some of those trends with some of the data that we see here at Fidelity as well.
And then on the research side too, we also get to leverage some of our internal partners, whether it's here in Canada or also down in the States as well too. So some of the people may have seen from Bobby Barnes. He's been a great resource to our team as well too on kind of analyzing certain trends that we're seeing in the marketplace and how to well position investors when it comes to certain factors or positioning in clients' models.
You mentioned Bobby Barnes. He is one of our lovely guests on Fidelity Connects for advisors. What's your relationship like with him?
Yeah, so Bobby Barnes, for those who don't know, is the head of our quantitative index solutions team down in Boston. And our relationship with him is that he's a wealth of knowledge, or him and his team are a wealth of knowledge when it comes to factor positioning, where the market's tilting one way or another when it comes to factors. And so we're able to leverage him in a multitude of fashions, including quarterly calls, where we get an update directly from him on what the team is liking in the market and areas that maybe we should be tilting away from. But he's been on the Fidelity Connects podcast previously, which I think is now available as a podcast on Spotify. And I think he's also coming up on our Upside Ticker Talk with Etienne and Jean-Claude Bouchard. So I highly recommend for investors to go take a look or go take a listen to him directly.
So as you mentioned, you do speak with advisors, you travel around.
Yeah.
What's one misconception about ETFs that you hear from, maybe not advisors, but they'll say their clients maybe say this. What's one misconception that drives you crazy?
Yeah, for me, it's that a lot of people associate ETFs automatically with low cost or passive investment vehicles, and that's not necessarily the case. It probably was 10 years ago, but the landscape in Canada has changed so much that other ETF products have become very popular. An example I always like to give is if you have a passive index mutual fund or an actively managed ETF, the ETF is probably going to be more expensive. So associating ETFs with low cost is a misconception in the industry. It's often true because a lot of ETFs are passively managed, but a lot of ETFs are managed in other ways as well.
And I think the popularity for active has skyrocketed as well.
Yeah, for active and also like strategic beta or what we call smart beta type products, so like the all-in-ones, for example, that category as a whole has skyrocketed in terms of popularity because there's still a want from the individual investor to have some sort of, call it either decision-making or management style when it comes to their investment. And so having just that traditional passive sense doesn't sit well with some investors. So having that exposure to what we would call an asset allocation ETF has definitely grown in popularity, and it's very nice to see.
Is there, well, you kind of just touched on it, but is there a theme that you think investors are missing out on?
I would say that I think to go back to maybe what Adam said earlier a little bit about just globally diversifying your portfolio, a lot of investors have been overexposed to US equities because that's what's worked really well, especially post 2009 great financial crisis. So I think just a simple theme that we're missing out on is just plain old diversification, looking at different asset classes, looking at different regions, assessing our portfolio for a wide range of outcomes, rather than just going all in on tech and AI. And this year has been a great example that other things in the market can work. So I think a lot of investors are starting to think about that again, but I think we could do a better job of it.
Yeah, and to add on to Mark's point there too, is that diversification piece. And so like in the international side, pairing it with value, with US growth, so that you're getting less tech, more maybe financials from the European sector, is something that I'm excited to see people get back into as, again, just a core diversification tool.
And on that, I think that is the perfect way to wrap everything up. Thank you, gentlemen, for this discussion.
Thanks.
And thank you for joining me on The Upside. For more investor content, visit Fidelity Canada's LinkedIn and YouTube page. And remember, working with a financial advisor is the best investment you can make on your financial journey. Thank you again for tuning in. I'm Nicole Coriale.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.